I am pleased to be joined here at the World Oil and Gas Week by Mike Muller of Shell Trading. Mike is Vice President of Crude Trading and Supply at the company. Now, hello Mike, and welcome to the World Oil and Gas Week 2015. Tell me, why did Shell Trading decide to take a lead sponsor role this week?
It's the first time we've actually taken a sponsorship role at this week, and as a trading and supply part of the business, we felt it was a good opportunity to portray what it is we do as a more integrated part of the company, and also to advertise our capabilities and our offerings to a large number of people whom we're already doing business with, but others whom we're not yet doing business with. We have capabilities such as risk management, but we've also been involved in helping people structure deals in the upstream sector, whereby we get the offtake, and associated with that, we provide services such as structured financing alongside banks. And we can sometimes add value to that, and it's gone down very well.
Okay, so given that Shell Trading focuses on moving and monetizing the hydrocarbons after they are produced, what can E&P companies learn and achieve by partnering with a company like yours?
Well, on the after bit, we are the largest off-taker of oil from most independents in any arena you look at. So if you go to the European contexts, North America, West Africa, Nigeria, we have a very strong footprint. We have a tradition going back more than 10 years of taking oil from independent producers and paying them more than acceptable market terms for that. And the reason we can be good at this and have such a large share of market is that in aggregating all these volumes, we create efficiencies. And sometimes what we find is we can recycle some of those efficiency gains to those independent producers in the shape of offerings. And those offerings can be helping arrange lending syndicates, they can be risk management services, or they can simply be a premium.
Your partnership with E&P companies, does it not contradict Shell's own upstream strategy?
Well, not at all really, because what we have is we have a lot of assets, many of them late life, which we cannot possibly all develop at once because we have to be selective in our capital discipline. And therefore it makes perfect sense for us to divest certain assets where perhaps our cost structure or our priorities are not going to allow us to make the most of those assets, and sometimes the governments then have issues with that. It's much better for us to transfer those to people that have the capabilities and the readiness to invest now and develop them. But what we can do then is we can say to those buyers of those assets, why don't you work with us as an off-taker so that you can continue to benefit from our capabilities and our knowledge of the asset. So there's no contradiction. If anything, there's a complementarity, so long as we're operating in a space which gives us those synergies I outlined.
In terms of trading, can you tell me what really matters in this business environment?
Okay. At this conference, there's been a lot of focus on where's the cash going to come from to fund the projects that people want to bring to market. But what I think is there's some really old-fashioned traditional values that do matter in this business, such as trust and relationships. And a lot of these deals we're talking about don't really get done unless people have a track record of delivery and have built relationships where people in the end are willing to take a leap of faith and work with others. It also helps to have a track record of delivery in terms of safety and in terms of infrastructure management. So what I mean by that is a company like mine has the ability to reassure people that we will always be there to ensure that there will not be something as terrible as a production shut-in, for example. And we can say that because we have ships on the water everywhere, and therefore if a ship breaks down or is running late and that threatens a shut-in of a terminal, we can probably pull on one that's in our system 1 or 2 days away, and that's a very strong reassuring message to people that want to work with us. And that, along with the rest of our business principles, is a pretty compelling proposition that people tend to like.
Now, you have mentioned that it's the first time you are attending the World Oil and Gas Week. What have been the highlights of the event so far for you?
Well, I expected more doom and gloom around the oil price, and I guess that sank in this time last year. I wasn't at that conference. And it's surprisingly constructive. A lot of people have come to me talking about various parts of the world, so it's been pleasantly focused not just within the European context. I've had a lot of inquiries on Africa, Central Asia, the Middle East, South America, etc. And my take is there is a lot of opportunity and there's a lot of money looking for returns. And the trick would appear to be, how can this industry package a set of deals that maybe look too risky for syndicated lending at the moment into more attractive propositions, which can still afford to pay the high returns that are going to be required to get those deals financed. And that's a new reality in this low-cost, low oil price world.
Okay, well, Mike, thank you very much.
Great, thank you.
Mike Muller of Shell Trading.